This is a wrap-up for the live market open for Wednesday, January 13th. After a few sour days, including yesterday, we had a positive change overnight. The positive mood came because of better than expected figures from China, trade balance, not the bottom line, but just better figures from imports and exports. Don't worry, these are still negative year over year, just less negative than expected. What does this mean? First and foremost, Australian dollar is higher, above 70 and settling there. Resistance 70.65, support weak support at 70, stronger support 69.4 because Australia trades a lot with China. It also means some better fortunes for the Canadian dollar. Dollar CAD falling now, 142.16. Support is at 142, resistance at the levels we've seen yesterday at 143. It also helps the Kiwi dollar just a bit, reaching resistance at 65.80. Further resistance maybe 66, support 65. And it also has an impact on a negative impact on safe havens. So dollar yen is moving higher, 118.30, extending the levels. Currently, this is some kind of resistance. Further resistance at 119.20 and 120. Support 117. No, 118, I would say, and 117.40. Okay, and also better mood in markets is good. Bad for the euro. Euro and yen are safe haven. Currently at 108.20 at the low end of the narrow range. 108 is support, followed by 1710. On the top side, 108.80 and 109.50. Okay, these are the major pairs. Perhaps standing out from yesterday is the British pound. Standing out, I mean, from commodity currencies traded with them. It did manage to recover, but not a lot. Yesterday, it got a big blow from industrial output and manufacturing production in the United Kingdom. It just came out much worse than expected. So, and it sort of adds to the doom and gloom figures. Also, we had some doomsaying from Albert Edwards in London of Societe Generale, talking about a global recession like in 2008. It was that the pound is in general weaker. Yesterday also we had oil prices tumbling below $30 for the first time in 12 or 13 years. And this is a psychological level. Currently oil prices are above 31, just at 31. Above, that's WTI crude oil. Also Brent is recovering with this the news from China, the better than expected trade balance. But today we have another test for oil. Oil is the main figure on the agenda. Crude oil inventories at 3:30 GMT, as every week, but it's becoming more and more important. If we have a drawdown in oil, that could support oil prices, support commodity currencies, weaken further the euro and the yen. But if we have a rise in inventories, that means more oil sloshing around, we could have a stronger euro, stronger yen, and weaker commodity prices. In addition, we have really second-tier figures, Eurozone industrial output at 10 GMT, the US beige book ahead of the Fed decision at the end of January, and perhaps another important figure, but not really immediately anytime soon. During the night, we have the Australian jobs figures. They were really superb in the past few months, past couple of months, and this time they're expected to be a bit weaker. So for the Aussie, we have a pause from Chinese data and some limited focus on Australian domestic figures. Okay, all in all, markets continue trading in this risk-on, risk-off atmosphere. Most of the time it's risk-off, most of the time it's negative, most of the time it's doom and gloom. Less manufacturing in the world. China is slowing down. China is the main issue. Oil prices are low, less demand because of China and other countries, too much supply. And from time to time, we have, like today, better figures from China and a correction and a better situation. The mood could darken once again. I don't see how things, we would need more than just one positive figure from China for the mood to really improve for a big turnaround. Yeah, so I guess That's it. Tomorrow we have the Bank of England, and Friday US figures, and we could have the return of indicators, but today it's more the indicators that are relevant are related to the global atmosphere. Okay, so that's it for today.